Good morning, everybody. So we're kind of getting a little bit of a dead cat bounce, a bit of a pullback. If you're unfamiliar with the phrase, when you have a market moving to the downside, we tend to look for those pullbacks or a market in a trend. These pullbacks, we're always trying to discern, is it really a pullback or is the market beginning to move back in the other direction? Afterwards, when we look back, we're able to say, oh yeah, that was just a dead cat bounce. So when we start to get that bump up off the lows, what we've been doing for the last few years is buy the dip. Tends to be the other direction. Buy the dip, buy the dip, buy the dip. So now it's the new argument. Should we sell the rip? This would be the rip. Sell into the rip or buy this massive dip. At the moment, the only thing we can say is it's pulling back, that it's up off of the lows. And it actually isn't much of a surprise because when I was talking with everybody yesterday, we all had pretty much the same opinion that we would see an upward market this morning. And the news would, in some way, try to validate and convince us that this move up was based on something else. When, you get a couple of down days and the market kind of stabilizes after getting the shock and awe fear, here we are with a little bit of a rally. Bloomberg, 5 things you need to know. You don't need a Bloomberg account, although I think this thing cost me like $5 a month. So if you don't have Bloomberg and it's $5 a month, you really got to ask, why not? Right? It's not going to be, immediate market news, but it sure does provide a little bit of depth to what's going on out there. So Putin is just basically doing whatever he wants, isn't really concerned about the sanctions yet at this point. The move in commodities was expected. The European markets are pricing in some rate hikes, got some inflation going on over there. Otherwise, for the most part, the 5 things you need to know really didn't have a lot in it that stood out. Which, I mean, it's all right. If there's just nothing there, there's nothing there. That's why I like this thing. It's quick, it's easy. If there is anything, it stands out really quick. When I didn't see anything in there, I took a look around at kind of my go-to sources. Koifin is a place that I used to use a lot more. They went from being a free place to a place that you now have to pay for to get any of the good stuff. But they still have a really good kind of a broad general outline for news, corporate events and industries. You can get into world economies. I'm just looking at global markets because I want to take a look around and ask, what happened last night when I was asleep? What did I miss? I want to see if there's anything going on in Europe, because if you think about it right now, it's like midday in Europe. We got to worry about anybody who may have a press briefing, a press release, somebody over there chipping their teeth we need to know about. Asia's already closed. I still want to know what's going on over there. Did they have anything happen in their market that I deem relevant to today's business? And if you just scroll through real quick, it's easy to see if there's anything really serious going on over there or if they're just kind of rehashing the same stuff. It just takes moments, pop in, take a look. Nothing really stands out. Move on to the next thing. The COG line was in play last night, 43.11. perfect bounce. Look at the amount of volume we had yesterday. It kind of stands out a little bit, right? When we're looking at volume, Thinkorswim has a thing called sizzle. Sizzle is the 5 average, right? It could be 5 days, 5 minutes, whatever you want to do. In Thinkorswim, its default is 5 days. So if you're looking at stock volume or futures volume, the volume sizzle would be the 5-day average volume. You add all 5 days up, divide it by 5, that gives you a number. If the current day's volume is greater than that 5-day average volume, then you've got a sizzle above 1, right? IBD talks about a down day with elevated volume and an up day with elevated volume. And for them, elevated volume is anything greater than yesterday. So it's a real simple metric. You don't need, like relative volume and all that other stuff. You can just look at yesterday's volume. Was today greater than yesterday? And it's a little misleading though, because the way the platform put all this together, it's counting yesterday's volume and Monday's volume. And this is really important. If you were watching the briefing yesterday, how we were looking at change percent, and it showed that we were down, even though we were above the close, we were above the open of Globex, and it still showed we were down. Well, this elevated volume isn't necessarily one day. It's all of Tuesday, but it's also all of Monday. So careful on things like this, right? Know your broker. They did say that we went back into correction territory. It was all over the news yesterday. It's these critical levels that become psychological playing fields. Right now, we've got our absolute low at 42.12. It's kind of a line in the sand, but long before we get there, that 4,300, we're really close to it as well. So 4,300 is going to be our line in the sand. We start to get below that, we're going to expect volatility to really pick up. And if we get below 4,200, it's going to get nasty. This is the volume profile with TPO. Volume is in green, time is in blue. So what we're looking at here is where was the greatest amount of time spent in the last 10 days, 44.56. It's the point of control here on the blue. And where was the greatest amount of volume? Same spot. Now, that might seem counterintuitive. Of course, we spent the most time there. That's where we have the most volume. That's not always the way it works. That's why we want to look at both of these. Where was the greatest amount of volume? Where was the greatest amount of time spent? We are outside of the box on volume, but we're back inside the box on time. The box is the 70th percentile. It's a 1 standard deviation. When we're out of the box, we expect to go back in. When we're at the low, we expect to go to the high. When we're at the high, we expect to go to the low. And when we break out of the box, we expect to come back into the box. So we left the box. We tried to get back in. More weakness, trying again to get back in. When you look left, notice that there's really no shallow area here. Maybe once we get above 44.50, 43.50, then we get a little bit of shallow area, but it's a very little, very small shallow area. So there's just a lot of resistance overhead. We have a shallow area in the time, but that's not really going to help us out. So for a move up off of these lows, it's just going to be a fight the whole way. There's going to be nothing easy about this move back up to the other side. We laid out some target levels on SPY yesterday in the chat. Kind of a make or break. It was a very simple metric to come up with. Tuesday's levels, Tuesday's high and Tuesday's low, right? So a very simple line in the sand on the SPY. Should we break below Tuesday's lows, we have one small spot at 420, and behind that, it's a roller coaster to the downside. So if we break below yesterday's low, it's a game on to the downside. We'll play it accordingly. And then a break above 435, we're going to be going to 445, 450. So the good thing is we have very simple lines to distinguish between that, right? 420, 415 to the downside, 445, 450 to the upside. all based on the concept is if we get outside of these two levels. And we're not outside of it, right? We're on an inside day. We're inside that range. So we're looking for an inside day breakout. It's also a red to green. A red to green play is just like what it sounds. You had a red day yesterday, green day today. You want to see it rally up above the open of the previous day. So these are definitive levels, very simple, easy to keep track of. If you're finding it difficult to trade in the current market environment, mark out an area, can consider it a zone. The current zone would be Globex high to Globex low, right? Very simple, easy zone. If we are in this zone, it's very likely to be a compressed market. You could consider this just an area of chop. And if you're struggling to be profitable in trading in the futures, avoid the hard stuff, right? Do the easy stuff. So trading inside this box would be considered hard. Move to a greater zone. Very simple. Just put a line in the sand, set an alert, wait for the market to get on the other side of that line, and then provide an opportunity, right? And if you did want to trade the zone, again, just set an alert, wait for price to get to the edge of the box, and then trade it. Be a heck of a lot better than just getting chewed up in the middle. You can see that consistent, persistent move in the NASDAQ a lot better than you can see it in the ES, but we're still struggling with the same concept. We're looking at the 15-minute chart. We're back above the 200 and we're riding the 50 really nice, right? And I do like my higher moving averages. They provide context, but it doesn't matter what time frame you're on. If you use the moving averages enough, you'll realize that it doesn't matter if you're on a daily, a weekly, an hourly, even a 10-second chart. If price crosses and rises above the 50 period and the 200 period moving average, you have a significant change event from the price patterns that you did have to what you have now, right? So the 50 and the 200 work anywhere, they work everywhere, any time frame you want. You're looking for a crossover, a change event, and then riding the moving average back in the other direction. What we still don't know yet, is this a dead cat bounce, or are we running back up to the previous levels? Yesterday's levels are going to be our line in the sand, and they are absolutely critical levels. So if we break below yesterday's low, it's going to get really nasty. We're headed to the downside with depth and conviction. If we happen to break out of the top of yesterday's range, our first target is going to be 14.6. I will be looking to swing trade that in the futures, but you could do it with the QQQ or the NDX if you're uncomfortable swing trading the futures. 14.6 will be the upside target. It is a shortened week, so you got to really keep that in mind. You look at the volume profile and the profile on time, we got a lot of trash to deal with. It got a little shallow area, but not very much. So even if we do break through the high of yesterday, we've got overhead resistance at 14.3, and it's just going to be a heck of a fight to get back up through there. We do have this really nice inverted head and shoulders, but it's a very large pattern on a large time frame. It could take days to unfold. It's also a pretty ugly head and shoulders, and the clarity of the pattern kind of bleeds through into its success rate. Everything's still directly connected to what's going on in the news. Definitely do not want to lose track of that. Speaking of the news, bring in the calendar. 9 o'clock, 10 o'clock, 11:30, and 1. Make no mistake about it, at 11:30 and 1 o'clock today, we absolutely can see a change in market sentiment. Wouldn't be the first time. It most definitely won't be the last time. These two events are what we call additional auctions. There's always auctions going on. These are additional auctions. They have the capacity to completely reshape our market, to completely redesign the day. So if we've been trending, this can kill a trend. Absolutely. If we've been range bound, this can break us out of that range and send us into a trend. Keep your eye on the clock. It's one of the most powerful indicators that you can get, and it's free. Right? Everybody's got a freaking clock. So 9 o'clock and 10 o'clock. The bonds open at 8:20. The dollar opens at 8 a.m. We've got a couple of economic events, and that's the day. So we absolutely have the opportunity to see this, but we're going to be wanting to keep an eye on capital rotation, right? There's a huge sea change happening right now between the 60/40 portfolios, and this kind of gets into the bigger picture. But a lot of your 401k, retirement institutions, even mutual funds, and think of money managers, big institutions, pension funds, they're always on the hunt between value and growth, right? And there's this big cyclical argument of should we be in value, should we be in growth? And then with the 60/40 portfolio, it's supposed to have something like 60% bonds, 40% stock. Well, bonds haven't done anything for a few years with the low rates. So everybody wasn't really being all that diligent with the 60/40. You start looking at the way that bonds are moving around now, they're talking about raising rates. We're getting this complete shift in market sentiment. There is a value and a growth ETF that you can focus on. SPYG, growth, SPYV, it's value. Simple enough, easy to remember, right? Just add the G and add the V. There's all kinds of comparison indicators that are on Thinkorswim, price ratio indicators, price comparison indicators. You could just use the comparison, just literally type the word comparison, and you get an indicator that allows you to add a symbol. You can add more than one symbol because you can add more than one comparison. And take a look at the difference right now between value and growth. Think about the names that are in these ETFs, because what is an ETF? It's a basket of stocks. So when we go over and look at the grid, this is SPYV. This is value stocks. Berkshire Hathaway, JP Morgan, Bank of America, Pfizer, Disney, Johnson & Johnson, Chevron, Cisco Systems. There's a lot of financial names, a little bit of healthcare, streaming services, and this is what they would consider value companies. Growth names: Apple, Microsoft, Amazon, Google, Facebook, Tesla, Nvidia, Adobe. So these are your growth names. And think about the way that things have been moving around in the market the last few days. Go back and look at these in their two different perspectives. It's been a complete rotation. There'll be days where all of these are down and the other ones are mostly up, or a day where all of those are down and these are mostly up. So we're just getting that rotation back and forth. There's nothing sticking yet. Looking at the sectors that are up this morning, the marijuana sector, Bitcoin, which makes perfect sense because Bitcoin just really got hammered to the downside. Linear regression alone says it's going to come back the other direction. It's got an average daily range of 4.1. It's moved in the pre-market 2.94. It even has a market maker move right now of an additional 3.5%. So its average daily range is a 4-point move, and it has an additional 3.5 added to that in the current environment. IGV is expanded tech, cloud computing, more tech, and XLK tech. Kind of getting the idea there, right? Tech and maybe a little bit of tech and probably some tech. Airlines and financials. You got to really keep your eye on the two main sectors at all times: finance and technology, right? You can't see a rally in the S&P if you don't have at least one of those two, and it would be better to have both, because if it's just finance, then it's not bringing the NASDAQ with it. Emerging markets is up a little bit this morning, but not not too much, and junk is basically flat. You want to keep your eye on junk because it's very similar to the EEM as a tool that we would monitor, right? Don't trade this. You watch this. Use it very similar to an indicator. If we're looking for a rally up and out in the S&P and the Nasdaq, back to those higher levels, not just a one-day dead cat bounce, we're going to need to see J and K junk making that move back up with it. Emerging markets, EEM, and junk is two ETFs that you can use very similar to just an indicator. So you can see that the bonds, the dollar, and the VIX all sitting at their lows. The Dow, the Russell, the S&P, and the Nasdaq all sitting near the highs of this range. You really want to keep your eye on the dollar and the VIX. You want to make sure that these two charts don't become correlated. It'll start to indicate a global risk that they're piling into the dollar looking for a place to hide. So through the morning this morning, we want to see the bonds stabilize. We really don't want to see them break these critical levels. I've got that line in the sand that becomes really important. So here's the 10-year. And you can see that we're not back at those lows yet. And that's what we really want to keep our eye on. We don't want to see that 10-year break below these lows here. We really need to see it get back above the 127. Took that rejection yesterday. We didn't manage to get back through it. We need to get these back above their critical levels. What we don't want to see is any really big exaggerated moves, right? So a slow grind back down to the 125 area, not too concerning. Big, deep, sharp, aggressive, drastic moves, that's what we want to watch out for, right? That's the concerning moves that really need to pay attention to. If you don't want the ZB or the ZN, then you can check the ZB. It's a 30-year. It's a little deeper in scope, right? Steps back just a little bit more. Still got the same criteria. Critical line in the sand has been broken. Got a Busby off the bottom of it. At 150 becomes the critical level. We don't want to see any exaggerated moves here, and we really need to see this get back above that 153. So you can see the flag right now, and the argument, has it failed? It hasn't failed yet. But if we're looking for a failed flag, then we're going to look to see this break back to the upside, perhaps give a Busby, and then begin reciprocating above the 153. Yesterday's low is the major resistance that it's dealing with right now. It's got to get back above yesterday's low. It doesn't really count until the market's open. So the fact that we're underneath it right now, well, we'll see where we're at in 20 minutes because in 20 minutes they open. So I really want to keep your eye on these in the next 20 minutes. If we break down here, it's going to get nasty. All right, so we're looking at the S&P 500 pre-market change percent. We've got a lot of gray on the screen. One way to sharpen that up is change it from whole numbers, -3 to +3, and go down to 0.1%. By doing that, we get some color in here. And now anything that's gray is basically flat and hasn't had a move in the pre-market. A lot of green on the screen, risk on. But keep your focus on the difference between value and growth, especially if you're going to be looking for any swing trades right now. For day trades, that move in energy yesterday really set us up for a nice red to green today because we had a lot of energy names that were down yesterday. Energy's been the one that's moving around enough to really get some trade opportunities, but it'll still be those three: energy, finance, technology. These other ones are all right, but they don't really have a lot of liquidity when it comes to the option side of things, or their options are just really expensive. So it becomes prohibitive to a lot of people looking to day trade in the options. Now, if you look at how much we're up and how much we're down on a lot of these names, we're not up by very much in a lot of names. We kind of consider that a negligible amount. For me, it needs to be up at least 0.5% to be considered up, or down 0.5% to be considered down. Now we got the NASDAQ 100 pre-market change percent. Communications really getting whacked. Got a lot more red on the screen, right? Kind of try to dig down into that a little bit. Fortnite, ADI, Texas Instruments. The chip sector is looking really good this morning, right? Just keep in mind how much the names were down yesterday, and then try to consider, is this just a dead cat bounce? Are we just pulling back as a part of linear regression? How many names in the S&P are down at least 0.5%? None. How many are up at least 0.5%? 43. That's a good start. We're nearly half, right? Almost half of the S&P are up at least 0.5%. That's some good solid numbers this morning. We want to see this stick, and we don't want to see them get out of control. So when we're talking about how much are they up, they're up more than 0.5%. It's considered good. We start getting into some extreme numbers, up 2%, 2.5%, 3% in the pre-market. It's going to be a real clear indication that we're going to get like a pop at the open and a dump, right? So don't get caught in that head fake. Same thing on the other side. How many names in the NASDAQ are up at least 0.5%? 42. So less than half, but we're getting close to it. You want to look at the names that are on that list, and perhaps, maybe more importantly, the names that are not on this list, right? And the list is a good place to start. You're looking to filter out all of these names and get ready for the open with 2 or 3, maybe 4 names as you go into the open, right? Trying to watch and trade any more than that is just too much unless you're running like the Alpha Protocol play, and today's not the day for that. We look at how many names are up in the pre-market, with the only criteria being that they have weekly options. We've got a lot of names on the list, and very few are down at all this morning. Right now, if they're only up a quarter, or less than half, then I don't really count it. But look at all of these names that are just say up significantly. 9%, 8%, 5%. See a lot of newer IPO names in that list. And of course, we were looking at the sectors, but the S&P old school legacy sectors don't really cover our modern world, right? We got to have an EV sector, a pot sector. Looking at a lot of the EV names, something like Tesla, they got really beat down yesterday, starting to get that rebound back up inside the box. But again, we're still looking to answer that question. Is the rally a real rally, or is it just a pullback before continuing down into the next leg lower? So here's the EV market, kind of our homemade little ETF that we use. Most of the EV names look really good. The only ones that don't look good this morning are the ones that were looking good yesterday, right? So that same old linear regression. For a day trade, the EV market may be a really good play today. I don't think I would focus on them for a swing trade yet, but same thing with the pot names. They were down yesterday, getting a nice bump back in the other direction today. These could provide some day trades. I just don't expect this to stick, right? So if you're going to be looking at names from the pot side, just be really careful that you don't get caught in a pop at the open that dumps back down again, right? Get the opportunity for some inside day breakouts, maybe red to greens. Just be a little picky on the names that you pick, and you should be all right. And the crypto, it's another sector that we really just can't cover in the old school legacy S&P sectors. Crypto's looking really good this morning too. Just keep in mind that these crypto names are not coins, right? They're companies that are heavily invested in blockchain and or own a lot of coin. And this list came from the Smalls Exchange because they have a crypto ETF or a crypto futures product, and it's very much like an ETF. It's a basket of stocks. Well, if that basket of stocks is what they use for their futures product, then I figured it's a really good basket of stocks for us to use to kind of get a gauge of what's going on in the crypto market, right? Like using it for a sector ETF. So that's where these names came from. Considering how bad it was beat down yesterday, it makes sense that we're seeing a really strong rebound in a lot of these names today. We just want to be very careful on these, right? We're talking day trades only, no real swing trades, maybe something for Friday, perhaps next Friday at the most. The way that we've been running our swing trades in the current environment is buying calls around 90 days out or a little bit around that area, and then selling calls in the front against them to make sure that you have a way to protect the debit that you spent. Can't go out and spend $3,000 on a call and then just hope that it all works out. Hope is real. It's not a really good strategy. So by buying the calls around 90 days out, you give yourself plenty of time to sell calls in the front if you need to recap that debit that you spent. It gives you an ability to hedge individual trades without having to hedge your entire portfolio. If you don't need to sell the call, don't sell the call, right? If you buy the call and it just continues to go to the upside, let it do that. The other trades that we've been doing lately is buying a put on any markets that are at their structural lows, like we did in Microsoft on Friday. The idea is exactly the same thing. Go about 90 days out, buy a put. If price rebounds off of those lows and runs to the upside, then we'll just sell puts underneath the market all the way back up and let it run. So you have a way to recap the money spent on the put. The Microsoft put we bought Friday was a $2,000 put, right? There's no way I'm just going to throw $2,000 out there and just hope it works. So if we start to see the rebound in Microsoft, we just sell puts underneath the put we bought and run that thing all the way back up. If, on the other hand, it happens to break structure and continue to fall, and this whole market just crashes and burns, hey, you're in puts. Now, I did it in Microsoft, but you could just as easily do that in the Qs, SPY, whatever fits, right? If you think about what fell during Corona, everything fell. It wasn't growth versus value. It wasn't, go hide in gold. Everything fell. And listening on Bloomberg this morning, I'm always on the ear listening for anything about redemptions. And they had a guy on and they were asking him how much of his fund was in cash. And he started to get a little cagey, offering, some junk answer that really wasn't an answer at all. And he said, well, he's had a few people running redemptions on him. So it's already starting. And redemptions are a little bit like a snowball that you start to roll off the top of the hill. It just picks up speed and gets bigger the more it rolls down the hill. If you don't know what redemptions are, hit Google. You'll learn what they are really quick. All right, everybody, I'll see you all in the large caps room. This is my day to stream, and we'll get that started at around 9:15.